You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we are midway through July. Person you're about to hear from hasn't been on the show in years, but has been racking up trading profits all during that time, and for good reason too. Andrew Horowitz, the disciplinedinvestor.com. If you've got a question for him or myself, email kl@kerrylutz.com. Andrew, great to have you back on the show. With all the turmoil, all the chaos in the United States and around the world, reminds me of that movie Full Metal Jacket.
No.
Which
part?
The part where the gunnery sergeant says, Marines will live and die, but the Marine Corps is forever. And countries, companies will go out of business, bankrupt, but the stock market is forever here, Andrew.
It is. And seems to only want to go one direction lately. It's kind of fascinating how over the last, call it a few months, really for a longer time than that, but for a few months, good news is good news, bad news is good news, any news is good news. And the fact is that the Fed has done a great job of holding a carrot in front of all of our noses, right? Just kind of leading us to where they want to get that, inflation is here, but don't worry about it again. They used that for a while. And now they're talking up the whole idea of, and they talked about disinflation. Now we actually have some deflation that's setting in, and some of the world is actually reducing rates. What's really fascinating, though, right now is that everybody's real jacked up and excited about how a rate cut could be so exciting for the markets. And we're seeing that recently there's been a steepening in the yield curve, meaning that shorter term is lower, or the longer term is starting to come up a little bit instead of the still inverted, but not as inverted, if you will. That's been good for net interest margins for banks. That's why we're seeing Bank of America and Goldman and even Morgan Stanley, after kind of a rough going on their earnings, pop back into the positive. And we're seeing all the other areas do very well, even though not as much on the investment banking business and even on the trading business, but some of the bond business that they're doing, as well as the net interest margin money they're making, which is their bread and butter, how they actually make money, is doing real well. So kind of a fascinating time right now.
Yeah. So I read several people theorizing that inflation doesn't really happen so much from government spending. It happens when interest rates go up and the banks can make higher profits on loans. And as we know, fractional reserve banking, this is private creation of money. Is that what's happening now, where the banks are making bigger spreads so they want to make loans now?
I don't think that. I think that is an inflationary component that could be happening, but it hasn't been like that for a while. With the inverted yield curve for a while, they were really retracting a bit, and they were really doing their best to shore up their balance sheets everywhere they can because they didn't want to have another repeat. Remember something about the banks. The banks were got a get out of jail free card by the Fed. About a year and a half ago or so back, we saw that some of these banks were going out of business. And what happened was, the reason was that all of a sudden investors said, wait a second, let me get this straight. You have all these bonds that you bought and you're on your balance sheet, and now they're worth 20% less than they were. And when we look at those and we have to value them where they're going to be, you're never going to get out of them without a major loss. So you know what? We're going to sell your shares down, or you're not going to meet the required amounts for your government stress test, if you will. So what happened was that the government said, come on, we know these bonds are good. And they said, sell them to us. We'll pay you 100% of the face value right now because we'll hold them to maturity, because if they do, they're fine. The issue here is that the Fed has a much longer holding period ability. Their risk isn't infinite in terms of if they can hold things for long enough.
So true.
You can hold something. If you and I bought an investment that's down 80% and it looks like it's going lower, and let's say we're margined on it, that's a time when we have to say, okay, uncle, we're out. The Fed could say, I don't care. We'll hold them forever and we'll just create money to buy it. What happened in this cycle was twofold. The Fed made a terrible mistake, as they always do. They misjudged dramatically, not only inflation, but the combination of low interest rates and enormous, that the word doesn't fit. It's a much bigger word, whatever it is, gigantic, infinitesimal amounts of stimulus that was rained down on individuals and companies. Low tax rates, get out of jail free cards, everything that went on, mortgage, repayment pauses, student loan forgiveness, you name it. All this that happened, that was the inflationary situation. Now, some would say, well, we had no choice. Well, I think we had a choice of not doing the IRA, which was the Inflation Reduction Act, which was stimulus.
The opposite of what its name was. Milton Friedman always said, if you want to know the purpose of any law, just do the opposite of what it's named, right? Yeah. Like unemployment insurance actually ensured that we have unemployment. And the Inflation Reduction Act should be called the Inflation Acceleration Act, right?
Correct. Yep.
Yeah.
So that was the final nail in the coffin, right? That was the final. I think that was the final, moment that we had a situation where, that was the final accelerator of the inflation that we're having already. But the funny thing about inflation, everybody's all shot up and excited about how inflation has come down dramatically, which it has. But remember something: inflation will always come down. You have 5% inflation, 10% inflation for a couple, 3 years, and now inflation is zero. Everybody's excited. Problem is, you have 25% compounded, but 25% simple math, higher prices forever. Because God knows the Fed does not want deflation. And by the way, those people, you probably talked about this, Kerry, but deflation seems like, I like deflation, right? Wait, let me get this straight.
Yeah.
Prices are lower.
Your purchasing power goes up.
This seems awesome. The problem with deflation that most people don't know is it creates a psychological, I'll wait. You know what? The house is 500,000. Few of them are coming down. I'll wait a little while. The cars, 25, 50,000, pick a number, whatever it is. We're seeing the dealers are cutting prices. I'll wait. And as you wait, the consumer is not spending. And as the consumer is not spending, the car dealers say, wait a minute, we need to cut prices even more to bring them in, create more incentives somehow, sales, bonuses, zero interest rates, whatever it is. And what happens in a deflationary market is that prices come down, but more so, sales go down dramatically. The reason why things are so good right now is because we have inflation. The Fed wants a little bit of inflation. They come up with this 2% that everybody in the world, by the way, bought into, this arbitrary 2% inflation rate, which may change because if things don't work out and they can't get inflation down, they'll just probably put a 3 handle on it and say, well, it's about 2%. Yeah, it's still close.
It's almost.
It's, we're good with that.
So going back to something you said, like the Fed's time horizon, I want to go back to the mortgage crisis of 08 and 09, where basically the Fed, all these mortgage-backed securities were split up into tranches and interest, I don't even remember all the terms for it. And the Fed just basically bought them all. And guess what? Yeah. The housing crisis was over. And they actually made money off of all this stuff that people don't even realize that bailout of the whole mortgage market led to enormous profits for them and a redistribution of all these houses that were foreclosed. Your Blackstones got them and all your other hedge funds bought them up because they were borrowing for nothing and turned them into rental properties. And, maybe it's not that great now, but they're so far ahead of where they were. I mean, they own thousands of homes in our home state here in Florida, thousands. And now those houses, the rents have gone up and the equity in those houses has doubled. And the Fed got their money. So everybody's happy here, right?
Yeah, well, don't forget, they set up you remember Maiden Lane? That was basically a hedge fund that was set up by the Fed and the Treasury to put a lot of this bad debt in, just hold it forever and figure out if they could just make money on it, which they did.
Yeah.
It was essentially a hedge fund. Well, how great is that?
Yeah. Now, maybe it's not such a good investment buying the government's debt because nobody else wants it. Mm-hmm. And that's kind of the situation we're in. So looking ahead, putting the election aside, because that doesn't really matter because the structural problems in place, these deficits, Social Security running out of money and all this. And yet, how can the stock market go up with that type of backdrop?
Well, there's still a lot of stimulus in the markets. I also think the one thing that there's something that nobody really talks about very much, and I can't give you absolute. It's not conspiracy theory at all, by the way, but I can't give you absolute proof. But we do know something. We have around the world, there are countries that have funds. Switzerland has a gigantic sovereign wealth fund. Japan has been buying directly into their market. Norway has been. You name all these countries. Saudi Arabia. They own a lot of stocks. They have an enormous amount of assets. They have same as the Fed. They basically have an unlimited time horizon, right? Mm-hmm. And as you go out the time horizon, your risk kind of goes down to nothing. Well, with the dollar increasing in value, they convert their value of their lower currency into dollars. It's been going up in value. They press that up. They buy the stocks in our companies, not to mention our companies buying the stock in our companies. And
buybacks.
$110 billion buyback, $110 billion buyback. That's probably by plenty of countries and islands throughout Central America for $110 billion. But they're buying back $110 billion of their stock at basically any price that it goes. You wonder why everybody's so excited about the miserable earnings that they had, and that we're not quite sure what that AI, the Apple Intelligence announcement was, but the stock is up like 20-something% since then. It's a lot of the numbers that came out from the reality of a buyback. But that's what's going on. We have unlimited amounts of cash that's being generated by these countries through taxation. They're buying into our stocks. That's a backdrop of almost like we don't really care what the valuation is. Because if you look at the valuations, there's two ways to look at what's going on. One is, are you kidding me? There's a valuation area of some of the high tech and some of the part of the S&P market cap, the largest cap. That's like, oh, that's frothy. But the rationalization from the bulls is they're going to work their way into this. AI is going to create productivity. It's going to create a great backdrop for earnings and all that, which we'll see over the next 3 weeks, which I think there'll be some disappointment with, only because AI is going to take a long time to get going from the perspective of companies. There are certain picks and shovels companies that are doing well with this. Microsoft being one of them, maybe Amazon, maybe Google with their clouds, and NVIDIA, of course. AMD, I'm not so shot up about. SMCI is another one. Taiwan Semiconductor. So there's a few of them that are doing very well. Of course, the weight loss companies that everybody in the world wants to just go, hey, 20 pounds, thank you very much. So there are some things that are happening right now that are really interesting. The other side of the market, though, is fairly valued. You take the equal weighted, you take the lower tier. That's why we're seeing this incredible rally in small caps, because what's happening is enormous amounts of money are starting to come out of tech and rolled somewhere. And those managers that have a requirement to be in something, where are they going to go? Well, let's see. Financials look pretty good right now, especially if we're seeing a yield curve start to steepen a little bit, and the Fed coming to a little bit of a real reality that they're going to cut, which we'll see. That's number one. You see, number two, you see small caps. Oh my gosh, you see the run on small caps? It's like hysteria.
Crazy.
They're on a rager. They're on a bender.
Yeah.
And there's Tom Lee came out today with like 40% in the next, I think, 12 weeks is a prediction. And so the bottom line on this is that there's a lot of reversion to the mean, alternative assets that are going to be not alternatives, but alternative places to play in terms of where to put money right now that have been undervalued for some time. Growth has dominated value. Tech, biotech, consumer discretionary versus utilities and financials, consumer staples. These have been, and the amounts of money we're talking about, because we're talking about companies that money's coming out of $3 trillion companies. We're not talking about a one for one. It's like $1 comes out of these can buy $3 worth of the other companies. So there's a multiplier factor that's going on right now. So there's a lot of things that are pushing the markets up. Higher prices, higher all-time highs often beget all-time highs. Mm-hmm. There is excitement that there is some decision on, I think, the outcome of the presidency. I don't think that really holds a lot of opportunity. They'll build it up. And I think there's one more thing going on, Kerry. Mm-hmm. I think over the last 20 years, we've had some near-death experiences.
Right? I'm
just talking about the last 20 years. We've had a near-death experience financially, 08, 09, right? Is that in the 20-year period? I guess so. We've had some other craziness, by the way, in between there. And then we had a near-death experience in 2020. I think a lot of people are like, look, if the worst comes to worse, the shit hits the fan, the markets come down dramatically. It's going to be an opportunity when the Fed will step in, even though we're are we tapped? I don't know, $7-8 trillion of balance sheet assets and debt that's a multitude of that, of the U.S. government. But they will come to the rescue, creating money out of nowhere. We'll just look like Japan for a period of time. So I'm really not that worried. Plus, the fact is, if I was to pull my money out right when the situation hit, I was lost. Better yet, I'm not thinking about today or tomorrow. I'm not thinking about the war in, pick your poison, Ukraine or in Middle East. I'm not concerned about what's going on in some of the areas of housing and maybe even the commercial property markets around the world. I'm not concerned about, the amount of debt that these companies have, because I'm not thinking about today or tomorrow. I'm going to hold my money in for a much longer term. So this stuff has created a much stickier environment for people to just keep on putting their money in.
Mm-hmm. Yeah, no, I totally agree with you. And, so I want to talk to you about AI, because that has been the darling of Wall Street, the flavor of the month, if you will. The Wall Street sells dreams, right? Wall Street sells dreams and memes. And, they don't like to admit it, but, it's all about the story. Now, right. I'm sure you're using AI in your everyday business. I'm using it in mine. Maybe
you're recording right now with AI.
Yeah, we're recording with AI. When I do the show notes to this interview, I'm going to run it through the AI and then modify it and then clean it up on Chat GPT. So it is revolutionary, and I think potentially more revolutionary even than the internet was during the late 90s. But there's always a lag time, and there's always, you think it's going to come out one way. Like we thought all these .coms, zillions of them, if they just had .com in their name, they were gold. And that's kind of what we're going through with AI. And yet the eventual effects of AI could be far greater and more profound than the internet, I think by a magnitude of 10 to 100. But we're not just going to get there in a straight line. How do you play it, and how do you avoid getting burned on this trend?
Well, you missed blockchain. Everything blockchain was golden also for a long time. I don't remember the last time I remember saying, I want to buy that company because there's blockchain involved.
Yeah, true. Correct. So
I think the AI is a very interesting process. I think, again, right now we're in the early stages. You have to look at this like a gold rush of, the 1800s, when people would pick up and they would just run out to California. A little bit of a different scenario here, right? But they would run out to the West and risk their lives. And they would go, and what did we have? Well, they had to do a certain number of things. Number one, they had to get clothing. So Levi's. They had to buy picks and shovels. They had to get screens. They had to buy drinks. They had to get a tent. These are the areas, out there that did very well. The brothels did very well. The bars did well. The restaurants did well.
Did great, right?
All these did well. Now, did somebody absolutely make a lot of money by panning for gold? Maybe, maybe not. Most did not. Mm-hmm. Most suffered. They just paid for their existence out there. A lot of companies right now are going to pay for their existence by this AI thing, right? By just, for example, Microsoft. Microsoft doing great. They have obviously their fingers or their arms into OpenAI. Big piece of that, right? They got that going on. They have their Azure. They have a lot of things happening with next generation of what they're doing with AI as well. One of the things they're also doing is they're giving a lot of money. They're giving away to company to Kerry Lutz, saying, "Hey, Kerry, I'm going to give you $1 billion because you're building, this AI. Yeah, you'll do this. But what we want you to do is use that $1 billion to buy back into the Azure network, into our AI processing to help you build what you're building." So what did I just do as Microsoft? I just took money off my balance sheets and I just moved it into my income statement. Mm-hmm. Interesting. You wonder why they're doing so well and how all these companies could have all this extra revenue going on, because they're doing this situation. Amazon doing a very similar situation with credits on the AWS system, service platform. So we're seeing a lot of this go on, this money from the balance sheets, freeing it up, and which is just, assets that what do they do with it? With the hopes that they're going to hit something, that maybe they even take a piece of the companies. So there's going to be winners and losers, no question about this. You have to wonder, companies that, I don't know, do, for example, receptionists, thing of the past.
Yeah.
To a degree, right?
Secretaries too, right?
Copy boys.
Yeah. Elevator operators.
Well, right. These things you don't even see. Some people are like, what are you talking about? I don't even know what you're talking about. But what you have right now is the opportunity for a lot of these productivity gains from much of this and from companies going under. Now, there's always a room for someone to change what they're doing and go into a different business. We've seen that kind of evolution over time. But you have to wonder, where is this all going, to what level? I think there's some productivity issues that AI will help us with. Do we take it to the nth degree? And do we have another Terminator, Skynet situation out there? I don't know.
Elon Musk seems to think so.
Yeah. So he's very concerned about, where AI goes. I agree with that because it's garbage in, garbage out. The training, and by the way, and thank yourselves, everybody listening, watching, thank yourselves for giving all this information to all these major companies through your social media and through your files and what you do online and your searches, that they were able to, and any blog posts that you have and information that you've put out there on the web over the years, that they're basically stealing and putting into their AI large language models. Pretty cool.
Exactly. So is there a way to do this, or has it come and gone?
I think I think we're overdone on a lot of companies. A lot of companies will be trying harder to do it. I think we missed the first wave. If you missed it, if you missed your Microsoft, you missed your Google, Apple's a tertiary player because they're going to use it internally versus a picks and shovels type of a platform. Enhanced Siri. I always thought Siri was kind of AI to begin with, to a degree.
Yeah, she was like dumb AI.
Yeah.
Like, who do you think is dumber, Alexa or Siri?
Yeah, Rosie the robot. That one from
like Siri's a high school dropout and Alexa's a college dropout, right?
Right. I think that there's opportunity still in the major players. I don't know if they've washed out most of the profitability over the next 2 or 3 years already, though. If we consider some of the next gen on NVIDIA, the Blackwell format and platform or technology, and we look at that, interesting. They seem to think it's going to be a 3 or 4 time revenue multiplier compared to the current product line, and maybe. But if we take the idea that which happened actually years ago with Dell, when Dell was skyrocketing back in the early days, and we looked at the 30%, 40%, 50% year-over-year sales growth. How many years does it take till you're like, wait a second, we can't continue that pace of growth, because if we did, everybody will have like 5 PCs on their desk, and who needs that?
Yeah, so true.
So I think some of the play is over till we get next gen to see where we go from here. I think everybody wanted in, everybody hopped on, and now I think they're slowly. We've seen a couple of days that things are starting to turn a little bit, and that they're and everybody's still upgrading. All the analysts still upgrading, so they're still head over heels with this. Listen, we got 2 weeks from now till we see the earnings. So let's see how this plays out, how this shakes out.
All right. Hey, so we don't really know what's going to be. One final question on the market: Tesla. What's your take on Tesla? Is that an AI stock? Sure.
Is it AI stock? I mean, it's the Tesla as an EV play. Let's look at that versus Tesla as he has a lot of other stuff. A Musk play. There's differences, right? There's that that difference.
Definitely.
Musk will do everything he can to burn shorts. I mean, obviously, there's a recent rally from where we've been from 156 to 240 something over the last few weeks. On the better than expected sales numbers, but yet the robo-taxi has been pushed back, which will be pushed back again. And by the way, it's going to be pushed back again from there. But I think that you don't want to bet. First of all, you don't want to bet against Elon Musk. I mean, look at Starlink. That's just fascinating. SpaceX, fascinating.
Yeah.
Right. A guy that can build company after company after company and make every company's billions. Right. We're not just talking about starting something like, hey, I think it's worth $1 million. It's worth like $12 billion to start. Pretty unbelievable. I think Tesla's probably, if we look at it as a car company, they're a little bit spent. There's a lot more competition. Hybrids coming on strong. China sales are down significantly, better than expected recently, but still down significantly. Big, NIO, BYD. In India, you have companies now that are pushing. Actually, I just saw what's the name of the Indian company? I don't remember the name of the company. VinFast. VinFast is the Indian company, the electric vehicle company. There's a dealership right here in Fort Lauderdale. I was like, wow, yeah, that's pretty cool. You don't see any Chinese cars here. You'll see Indian cars.
We have a Lucid in West Palm Beach, a Lucid dealer.
Right. Polestar, you're probably a Polestar?
Yeah, Polestar's kicking around. They're barely as long as Saudi Arabia keeps feeding them, they'll be okay. But, the interesting thing is, and I'm a Tesla owner, so this is my third one. They keep getting better. Driving experience-wise, nothing can approach it. No other EV.
No, I agree with that.
They might be at 80% or 85% now, and tech-wise, they're not even in the same arena. They're like 5 to 10 years ahead. But that doesn't mean that they're going to make money. All these Chinese companies that were so touted over the past 20 years, it was just like the United States leading up to 1929. Had all these companies exploded on the market. They were doing amazing. There was one little problem, Andrew. They weren't really making any money. And that's what happened with the Chinese companies. They weren't really making any money.
There's one company out there. They have a really cool car. What was the company? They went bankrupt once and they're back. People buy the cars just as a backup battery.
Yeah.
You seen that?
Yeah. I didn't hear about that, but it makes...
This is, one with an F. I think it starts with, not Faraday, the other guys.
Fisker,
yeah. But people buy the Fiskers for the batteries but they're out of business. So it's like 20 grand and you just have a whole house battery.
Yeah. Hey, the batteries, there's so many applications. Hey, when you look energy, the Tesla's building those Megapacks, as they call them, which, won't solve the energy problem. But if you go out west on Southern Boulevard in Florida, that's west from West Palm Beach, and you get to like the sugar plantations, there are about 10 or 15 peaker plants there. The only purpose of those plants is to go on line when they're short of capacity, when there's not enough electricity. Otherwise, they're off all the time. They just shut down. So the Megapack can get rid of a lot of them, which I find kind of fascinating. People don't really understand the electric industry. I've studied it my whole life, and I've had people on guests who are major players in it. I kind of get it. And it seems to me these electrical utilities are going to clean up from AI more than anybody else.
I would agree.
Picks and shovels.
Right. I mean, you got NE, next year, which is FP&L down here.
Yeah.
CMS, you got Southern Energy. You got all these companies and the mini and anything with nuclear related. If in fact we need to have these gigawatt facilities that Intel's building and this one's building and that one's building, the energy consumption is absurd.
Yeah, 50,000
we have
homes.
It's unbelievable.
One data center is 50,000.
The one that Intel's doing is 230.
Yeah, so even bigger.
230,000 homes.
I mean, like building a city. So these utilities, we're not going to have enough electricity. We're going to have to tap into every available source, which means coal, whether you like it or not. And B, the profits of these companies are going to be enormous because they're so high fixed capital companies. And it, to get approvals through for a power plant takes years. Mm-hmm. So, it's just going to explode, the whole thing. And what do utilities do? Why do old ladies, widows and orphans love them? Because they pay out a substantial amount of their profits in dividends, right?
Mm-hmm.
So that could be the pickaxe of the miners here.
I agree.
Miners.
Yeah, it's the brothels.
Yeah, the brothels and the bars and the casinos. Don't forget the bars were the casinos back then.
Right.
So
exactly.
And especially down south here, where you have population growth on top of it. And if you watched Mr. Wonderful, he said he's not building any data centers in the formerly great state of New York, the former Empire State, because he doesn't like the legal system. And I think a lot of people are following course there. So that means the southern utilities are really set to capture a huge amount.
Right.
And if they have any spare capacity, and it's hydro or whatever, I would venture to say you'll see power plants being built in the Dakotas from all the gas that they can't use.
Sure.
And they'll ship the power off to the Midwest or wherever.
Yep, I would agree.
Our data centers there.
Mm-hmm.
No tax in North Dakota. Perfect. So, all right. So it's not all doom and gloom then, huh?
No, not all doom and gloom. There's some in there, but not all.
Yeah. Hey, my former law partner used to say, Kerry, the situation is hopeless but never serious.
Right. I like that.
Yeah.
I like that.
So, hey, and Florida's still kicking ass, right?
That's right.
So,
That's right.
And other states, Tennessee. Can't believe the growth in the state of Tennessee. And people don't move to avoid taxes, they say, right?
Yeah. I have several friends that moved from New Jersey, and I got to tell you, they keep on telling me the instant raises they get of not paying the city and state taxes that they have to pay in the New York metro area, New Jersey, Connecticut, that whole area.
I know. I moved here from New York, and it was 12 years ago. And then it was a lot cheaper than it is now.
Mm-hmm.
Insurance was cheaper. Everything was cheaper. And, the taxes were like 20% of New York's real estate.
Crazy. Crazy.
Yeah. Nuts. So, all right. Hey, just tell us again where we find you, how we subscribe.
Sure. Go over to, we have 2 podcasts, right? Running since 2007, The Disciplined Investor. You can find that on all the important podcast repositories, apps, etc. DH Unplugged is another one, which I do with John C. Dvorak. It's Tuesday night. We do it live also to tape. And then thedisciplinedinvestor.com. You can find everything on there on how we manage money, what we do, the podcast, all sorts of good stuff.
Cool. All right. Hey, the link is in the show notes to this interview on financialsurvivalnetwork.com. While you're there, please sign up for your free newsletter. Appreciate you coming on, Andrew. It's been a pleasure talking about all this stuff. There's because I like getting in the weeds. I like to really look, and I like to get different viewpoints on what is really happening, because nobody really knows what's happening. You know your little
confusing
planet, but you don't really know all the others. And hey, if you got a question for Andrew or myself, shoot me an email at kl@kerrylutz.com. Andrew, we're not going to let so much time go by this time.
Yeah, I appreciate it. Absolutely. Thanks so much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.